Hello guys and welcome. My name is Martin Jones and this, as you can see, is the London School of Business and Finance, and as you can see referenced over my shoulder, we are on TV at the moment and I am in the middle of 5 sessions talking about financial reporting, starting at the base level with the bookkeeping at level 2 and ending in the next studio just next door where I'll be going up to level 4. This recording is right in the middle at level 3 where I'm doing financial accounting preparation. This is the second of 2 half hours actually on level 3. So welcome back if you saw the first half hour. The first half hour is advanced bookkeeping, and this, although level 3 goes up a very slight notch into proper final accounts preparation, proper financial accounts you might call it. And over my shoulder is the exercise. I'm just going to go mini-me, just make sure I've got everything all lined up perfectly. Yep, there we go. Here I go. I'm going to reveal to you what I'm going to be doing. There it is. There is final accounts preparation week number 5. And as you can see from the information here, I'll tell you what, I remember this one. This is a right devil because looks really easy, doesn't it, that little bit there? But I need to get a wiggle on because I've got to present to you a whole balance sheet. Do you see that? It looks outrageous, doesn't it? But maybe that's the best way of showing it to you. Look at that little devil. I've got to show you a whole balance sheet. Wow. That's going to keep me busy, isn't it? There's the trial balance. Unfortunately, in this short 20-minute session, I don't have to show you the P&L, but I do have to, I've got the P&L figure already available in the question, but I do have to take all the balance sheet balances and put them in the right place on the balance sheet. Pretty challenging. So here we go. There's a little bit of introduction. It's a strange little introduction, but here it is. So you are now working on the final accounts of another sole trader, Onyx Trading. You are to prepare the statement of financial position for Onyx, statement of financial position, the balance sheet, for Onyx Trading as at the current year end. The final trial balance is below, so right below. A profit for the year of 42,495 has been recorded. So the examiner has done us a favour and actually netted together all of the P and L T accounts. Yeah, good. All the P and L T accounts, and given us a figure already to slot into our movement on sole trader equity. More of that later. Onyx has the policy of showing trade receivables net of any allowance for doubtful debts. I don't really want to say too much about that, but I will translate it slightly. First of all, Onyx is a sole trader. Yes, there it is at the top, which means it's not strictly governed by international financial reporting standards, but it is commonplace when presenting the balance sheet to show the net figure, as it's called, for receivables, which is the recoverable receivables, the total that you think you are going to receive. And when you look in the notes, that total that you expect to receive is split between how much you're owed and how much you've allowed as an allowance. Okay, so it's very usual when presenting receivables to present what's called the net, which is what you think you're going to receive. What do I need to do to complete this task? Gosh, that's tricky. I've got to go and have a look at the T account and find the 2 relevant components. And I tell you what, being in the studio doesn't half make me dehydrate. And I've just brought a cup of tea in for myself, actually just a cup of hot water. And I can feel myself getting a headache, so before I start scooting about backwards and forwards, I'm going to be sensible and have a sip of this. Yeah, I remember this because it's a bit tricky because what you really want is the information right there in front of you, but you've got to scoot all the way down to find the relevant information in a whole trial balance, which is quite a big ask, isn't it? So there is the start of the trial balance. Prepare the statement of financial position as I there. Do not use brackets. On extra, there's the trial balance. And maybe I need to change the scale so it's become really visible. And there is the list of trial balance balances all the way down to the bottom. You can't quite see the bottom on that scale, so I'll just bring it up. There we go. There's the totals at the bottom. 371050. The two totals, debits and credits being equal because it's a trial balance. It balances the trial balance. And we're going to put that stuff onto the balance sheet in just one moment. But on the balance sheet, we're going to have inventory, receivables and bank, of course, and in receivables we're going to have the net receivables, which means that we have to go and find the two components of receivables that we need to net off to give us the net. So we need to find the language of receivables, and you know, we can be sure it's not going to be the easiest language that's being used. So I'm cheating a bit, of course. I've prepared this exercise so I know what's coming up. I mean, you're kind of looking under R, really, aren't you, for receivables, or D for debtors. But if you look under D for debtors, no, it's not there. If you're looking under R for receivables, no, it's not there. Oh, okay. So we're using the old-fashioned name for receivables, which is the sales ledger control account. There. 25, actually I can't read it now, 25660, and we shouldn't be too surprised if the allowance against this, the provision for bad debts, also has some strange old-fashioned language. Let's go and scoot through all the balances and try and find the allowance for bad debts. Well, isn't that nice? The allowance for doubtful debts, the allowance for bad debts is, oh gosh, that's nice. The allowance for doubtful debts is just called the allowance for doubtful debts. Isn't that nice and simple? So that allowance for doubtful debts, actually I need to change the scale to show how these two work with each other. Can you see those? Yes, you can see those two together. So maybe I need to put a little debit next to this to really highlight its debtorness. Okay, I've got to change the functionality of the pen. Give me a second. And the creditness of this. So, gosh, that's a really horrible looking pen. The allowance for doubtful debts isn't actually a credit at all. We don't owe anyone for that, but it is a reduction to the full receivables. So basically what we're saying is we're owed 25,660, but of that 25,660, we don't think we'll get 1,200. So what we do think we'll get is the net of the two. So no more talking, let's whack it in and then see if we can carry on from there. So 25,660 minus 1,200 equals 24,460. And of course I'm cheating here, I've got my notes all ready for me. Oops, just dropped a little bit of paper. Because I tell you what, it's pretty challenging bouncing around in the studio, checking for the sound levels and all that, so I'm certainly well prepared here. What we're saying, 24, let's get the figure, 2B, 24,460, exactly right, 24,460. And do you know what I'm going to do? With the 24,460, I'm going to drop it in there, and without further ado, I am going to drop it onto the face of the balance sheet using the more usual names. So we're going to have the usual stuff in current assets. The order doesn't matter, but we're going to have inventory, receivables, prepayments, ooh, what happened there? Seem to be having a bit of a moment with my T's. I don't know what's happening with my T's. Prepayments and bank. And that is the standard order, although the order itself wasn't a requirement of the exam paper. And just to reinforce what I've said in previous recordings, the numbers you have to type in this space here, but the phrases are selected from a drop-down menu, making it that much easier to get these phrases. You don't actually have to make them up. You have them all there, available on a drop-down menu. So we have got receivables already, 24,460. So where's my receivables? 24,460. And my job is to tick through all that guff up there as fast as I can and not run out of time. Quite a challenge. So I've got that baby in the bag, and I'm going to tick everything, kind of. Anything that would appear on the P&L, I'm going to label P&L. Accruals, that is our liability. So I'm going to pop that into the bottom of the balance sheet. That's our creditor. No marks for order, it doesn't matter the order here. 1940. Done. Then back up again. Administrative expenses, that's P&L, so I'm going to reference that with a P/L and move on. Advertising expenses, that's P&L. I'm going to reference that with a P/L and move on. Allowance for doubtful debts adjustment, that's the increase in the provision for doubtful debts. That debit balance there is an expense, and that expense goes to the P&L. I'm done. The bank is obviously a bank. I'm going to drop that into the bank. That's a debit balance, meaning it's an asset. 1645. 1645. And I'll go back and tick that. Might already have ticked it. And I've already ticked it. Carrying on. Bank charges, that's an expense and goes into the P&L. Carrying on. Capital, we don't really know what that is until we get down to the bottom. That has to be the opening capital, it's the only thing it can be. So 22,200. And from that, of course, we're going to have the profit and drawings. Again, available in drop-down menu, and we carry on. Back up to the top. Closing inventory is a tricky one, isn't it? Because there's both a debit and a credit for the closing inventory. The closing inventory is an asset, and the asset is on the asset side, which is over here. That one there, that 22,420. That goes onto the balance sheet. 22,420, 22,420. Lovely. And we carry on. And we've got this other entry on the same line as the closing inventory. That credit balance there, that is for the P&L. There's actually a reduction to the cost of sales. So the purchases just above is overstated for the P&L because it includes some of the stock, so we need to shrink the purchases down to cost of sales by pulling out the inventory. Basically, we're pulling the purchases off the P&L and slapping it onto the balance sheet. That's what that double entry is doing. Depreciation charges is a charge, that's an expense, that goes to the P&L. The disposal of non-current assets, is a gain or loss on disposal of non-current assets. That goes to the P&L. Notice it doesn't matter if you do or don't know if that's a gain or loss. So credit balance is the equivalent of a sale, and therefore it's a gain. But it doesn't matter because it goes to the P&L, not our business governor. Drawings, that's a reduction to the capital. That's money being taken out of the capital by the owner. Drawings, 20,000, nice round figure. Almost like he took a lump sum out at the end of the year. And we move on. Equipment of cost, 32,800. That goes onto the balance sheet, of course. 32,800. 32,800. And we draw down from the drop-down menu the word equipment. Oh, there you go. The word equipment. And now we need the accumulated depreciation related. Equipment accumulated depreciation, that is not a liability. That credit balance is not actually a creditor. It is a reduction to the carrying value of the PPE. So 14350. 14350. And one is deducted from the other, but we're showing no negative signs here. Back up again, carrying on. Opening inventory, that is P&L. So the first thing that we sold as at the beginning of the year was last year's closing inventory. Respected to this year, last year's closing inventory is this year's opening inventory and is part of the cost of the stuff that we sold. The cost of the stuff that we sold is called cost of sales and appears in the P&L. Payroll expenses is an expense and goes in the P&L. The payroll liabilities is a liability, so it goes onto the balance sheet. And we need a phrase for this, so maybe we'll choose one of those. Can you see payroll liabilities is an available from the drop down? So payroll liabilities, just call it payroll for our purposes. No, let's put it in as full. Payroll liabilities, in case of any ambiguity. Payroll liabilities 630. Lovely. And we move on. Ticking through as we go, almost there now. Prepayments is a receivable, 900, and goes onto the balance sheet. 900. We've even got a bucket for it already. 900, there we go. Nice. And we carry on. Purchases is P&L, of course. Purchase ledger control account is horrible old-fashioned language for payables. Payables are payable and therefore they're creditors on the balance sheet. We call them by their proper name, which is payables. Here on the balance sheet. Payables 16720. How do we do this? 16. Have we done that right? 720. Lovely. And we carry on. Uh, 16720. Yeah, 16720. Rent is an expense going to the P&L. Sales is a revenue going to the P&L. And sales returns is a reduction to sales and goes to the P&L. But the VAT is what we owe the government for VAT, and that goes to the balance sheet. So it's a credit balance, as you can see. So we owe them 3890. VAT 3890. And time for a sip.
Where's the profit gone?
Oh yes, of course, it was given in the question at the start. Thank you, Mr. Examiner, for that. Can you see it now? There it is. So I'll have that now. 42,495. 42,495. Lovely. So 22,200 plus 42,495 minus 20 equals 44,695. And I've got a cheat sheet here, let's just check that. Yep, good, that's looking good. And now we need to balance that with the top of the balance sheet. So off we go. Up to the top, so 32,800 minus the accumulated depreciation of 14,350 is 18,450. Add down in the current assets. 22,420 plus 24,460 plus 900 plus 1,645 equals 49,425, 49,425. $49,425 indeed. 1940 plus 630 plus 16720 plus 3890 is a total of 23,180. Does that agree? Yep. Deduct one from the other, so change the sign. Plus 49,425 equals 26,245. Yep. 20. How do I line this up? 26,245, and then add that guff right at the very top. Can you see it? Plus 1,8,450, and it's a grandstand finish for 44,695. Let's compare the top of the balance sheet with the bottom of the balance sheet. There we go. Those two numbers are the same. 44,695. Yep. And 44,695. What's the chances of that happening in the examination? Absolute zero. Maybe it will. Maybe you're very good with the balance sheet. Pretty challenging that though. Pretty challenging. Well, that's probably a bit too big, isn't it? I'll just pull that back in again. It's quite a nice scale I had it on. Yeah, that's quite a nice scale, isn't it, there? And that's it. That's the exercise done there. It doesn't really fit on the screen at one go without changing the scale again, does it? So I'll just change it again. There we go. So there's the balance sheet. Looking nice. Looking nice. And everything's ticked through and we've done all the exercise. Fantastic. Okay, well in that case I guess it's time for me to go big me and summarise what we've done together. Smashing. I'll just put my phone back in my pocket because I've got to change studios. Don't want to be leaving bits and bobs behind. I want to be taking the pen for the next guy. Let me go big me now and summarise. Thank you very much for listening in, for watching in as I performed a bit of financial accounts preparation, as I performed a bit of financial accounting. This was level 3, and the paper just immediately before was also level 3. One was advanced bookkeeping, the other one was final accounts preparation. I'm going into the next studio next, where I'm going to do level 4. But it's been a pleasure to present to you on level 3. I wish you very, very good luck with your AAT studies. Very, very good luck with your AAT studies. And I look forward to seeing you next week when we continue our battle with AAT level 3. I look forward to seeing you next week when we continue with our AAT financial reporting odyssey. See you soon.